Welcome everyone. Let's go through today's price action analysis of Bank Nifty futures. I'm using 1 minute candlestick chart and we'll be looking at first 30 minutes of the price action, what happened and what are the trades that were possible based on the methods that I've been outlining. We are using 7 point stop and 30 points target, right? So let's get started. This dark blue line is yesterday's low, which is where it opened. Try to go below it, but failed. The bar managed to close above it, but it has tail on both the sides, right? So we begin with trading range bar. The moment we see this, we start thinking about uh, whether the price is going to fail on either side of this bar, right? Next attempt is by the bulls to go past bar 1 high, but what do you see? Failed, right? But it closed bullish, at least the body is bullish. So we wait. I'm not going short immediately below this because one, this is a yesterday's low, which is a possible support coming into picture. So I wanted to wait for a second entry here, right? What happened next is that the another attempt was made by bulls, right? So you can see that this high is 809.35 and sorry 820.25 and this is 820.95. so hardly just few ticks it went up above bar too high and failed there. So bears are taking the control. There is a tail below this, so some bulls try to scale in below this bar too low, right? And on bar 4 when it opened they try to push the prices up, so those bulls must have gotten out looking at this bearish bar and they were disappointed, so they were getting out. So that is where we go short below bar 3, right, which gets triggered in bar 4 with a 7 point stop loss, right? So your entry will be around 14,800, so basically few points or few ticks below that low depending upon where you get filled, right? The entry bar was good. It closed at the low of the bar, but it couldn't get past the bar once low. So some sign of hesitation, but we stay put, right? We're not doing anything at this point of time yet. We have gone from 800 to 83. There is a pause. Bulls try to hold the ground here above the bar once low, but it did not close really that great. It has a tail on top, so it's a weak attempt by the bulls. Bulls bought the close of bar 5 and tried to push the prices up. So possibly those bulls who had not given up in this zone, they scaled in lower here, right? This bar's low is 783, this is 783, and they gave up somewhere here, right? Possibly they had bought the close of this bar thinking that the prices are going up. Now they gave up in this zone, right, which is where they gave up, and the price went down and it gave us our 30-point target. So this is 14,800, this is basically 14,772, and on this bar it went down to 14,767. So you got your 30 points target. Now let's look at the emotions that might go through the trader's mind. The moment when they see this bar, they're definitely elated and happy that yes, I took the right trade and it is going my way. When they see this pause, oh, that's not good. But you have to sit through, follow your rules, and don't try to act smart during the live trading, right? What happened here is that this bar, even though bulls tried to hold the ground and push the prices up, it would not hit your stop, right? It would not hit your stop because this is 800 and this is 805.80, right? It won't hit your stop, at least in the case that if you did not get filled worse. I mean, if you got filled below this 800 and it was a really worse fill, in that case you might, but that's part of the game. But if you didn't, you just sit through this price action that is happening, you got your 30-point target, right? The point that I'm making here is that it's not just the entries that are important. It is also important that you sit through the trades, let it work out. Price action is going to do its own game, you can't control what is going to happen. You just take the trades based on your method and follow it to the T, right? So you got this 30 point with this behavior wherein there is no good follow through for any movement. Like this bull action failed, bears are not getting follow through, this bear breakout again a pause, this bear breakout again a pause. So that was depicting a trading range kind of a price action at least till 920, right? 922. This is a failed breakout. Again, it went up. These bears, those who sold the close of this bar, tried to scale in and they gave up. I did not get long about this bar because that is too high in this trading range. By now, the trading range price action is confirmed, and hence I did not want to buy high. Right? Remember, when it's a trading range price action, we want to buy low and sell high. So I gave up on this trade. It closed, the bulls managed to get 4 consecutive bull bars. The price closed above bar two's high. I mean, the day's high was crossed and it closed above that. But what do you see next? Bears applied the pressure, the breakout failed. The breakout failed. Now, as I keep saying, whenever I see both sides of bar 1 failing, bull breakout failed above bar 1 high, bear breakout failed below bar 1 low, and then this is another failed breakout. I'm mostly waiting for second entries, right? What happened here is that when bears failed this bull breakout, bulls tried to scale in, and then finally they gave up here in somewhere in the middle, which is those who bought the close of this bull bar, which is bar 10, thinking that it's a bullish move and it is going to continue. They are disappointed when they saw bar 11 bear bar strong one and a failure. So they scaled in here below bar 11's low and they gave up. So you this middle somewhere in the middle, which is basically this area zone and then this, so that is where they got on at break even and they gave up. I did not go short below this bar because I wanted the trading range entries to be the second entries. Now this is quite lower. Ideal entry should have been below bar 10 low, but then bar 11 low and then bar 12 low. So it's getting lower and lower, and I did not want to get into this kind of trade because it is not part of my method, and I don't want to try this might work trades, right? And you can see that this trade triggered short below this if somebody went for this kind of a trade, and it just kept lingering around this, a lot of overlap and tails here, but the bears kept pushing. They did not allow bulls to take charge at all. That's why you see lower highs, and every single bar was putting up lower lows. At least it was not a strong down move, but at least the price was crawling down, and then it kept going down till this point 940 or so. Bulls made an attempt to get past this particular trend line that I haven't drawn here, but this is what I would be drawing, a breakout, but it failed near the EMA as well as near this yesterday's low, which proved to be a resistance. And then this is a big breakout that happened today. I did not take this trade because this is not part of my method. I could not think of anything that could get me into this short trade. Again, I did not go for this might work trade or something that I haven't tested or tried. Okay, so this was the only thing that I could manage today, 30 points. This is something that as I mentioned, I did not take because it did not fit in into my rules, but this is a valid trade for someone who is ready to take that risk and go for it. If they sat through all this, they definitely managed more than 100 points if they had the patience to sit through all this. It is easier to say that, oh, I will sit through this, but the price is not moving that fast as you expected, and there are tails going up and down, and the move is very slow. You become panicky and you might give up at any point in time, right? So managing to enter at the right time or right location is important, but at the same time sitting through the trades, letting it work out is also equally important, right? So if you can manage these two things, you are on your path to be a consistent winning trader. I hope this video helped. Thanks for watching.